Hello everyone, welcome to my channel. For those who don't know me, in my channel, I mainly share my investment journey with you guys. In my portfolio, I investment mainly on dividend stocks, and I would like to share each of them with you. So if you haven't seen my videos about previous dividend stocks, feel free to click the card shown above. The dividend stock I'm talking about today is Aecon Group Inc. with the ticker ARE.TO. So it's a company in the sector of industrials, mainly focused on engineering and constructions. The company currently has a market cap over 1 billion, which is not small, and the beta value is 0.99. So beta value usually tells how volatile a stock could be. So if the beta value is above 1, then that means the stock is more volatile than the average on the market. And if the beta value is less than 1, then that means the stock is more stable than the average of the stock. So the PE ratio of this company is around 15, which is good. So usually we want a PE ratio to be below 20. So the dividend yield is around 3.6%, and you will get $0.7 per share. The payout ratio of this stock is around 50%, which is well below 70%, which means that the dividend paid by this company is quite sustainable. So the next upcoming paying dividend date will be April 5th. So this company pays a quarterly dividend. So this will be the first dividend paid of this year. The ex-dividend date is March 22. That means if you hold this stock before or on March 22, you will get paid on the dividend date. So typically, after stock goes ex-dividend, the share price usually will drop by the amount of the dividend paid to reflect the fact that the new shareholders are not entitled to that payment. So what this tells us that if you're not that hurry to get the dividend for the first quarter, maybe you can wait after March 22 so that you can buy the stock at a relative lower price, and then you will get the dividend in the next quarter. If we look at the dividend history of this company, we can see that their dividend paid per share is actually increased year over year. However, the dividend yield percentage is not increasing year over year all the time. But for the most recently 5 years, the average dividend yield is around 3%, which is not bad. And also, if we look at their payout ratio, we can see they are kind of all keeping the payout ratio under 75%, except this year. So overall, they keep the payout ratio at a reasonable range, which means they pay some of their earnings to the shareholders as us, and they still keep enough money for them to develop and keep growing. And one other factor that we can use to determine whether to buy a stock or not is to look at the current PE ratio versus the 5-year average PE ratio. So if we look at the PE ratio for this company, we can see for the recent 5 years, the average is around 20, and currently is at 15.18. So usually the current ratio will goes to near the 5-year average. So that means if we buy it recently, we're actually buying it at a relatively low price. The price of this stock is currently at 19.58 as of the close market on last Friday. The fair value is calculated to be 26.78, which means this stock is currently at a price that is far below its fair value. So it is actually 26.9% undervalued, which means it's not a bad time to buy the stock. Now let's look at the financial status of this company. So the first thing that we want to do is to look at its balance sheet and calculate its current ratio. So basically, current ratio is that we use the total current assets to divide it by the total current liabilities. So if the current liabilities is much higher than the current assets, that's probably is not a good sign for the company. So usually a current ratio above 1 means that this company's financial state is very good. And if the current ratio is above 2, that means their financial state will be extremely good. So let's see how Aecon performed last year in 2020. So the current assets is 2201010 and divided by current liability, which is 1529602. So we can see the current ratio is well above 1, so which means the financial status of this company is good. And if we goes to the company's website, we can find this company have a very well diversified and resilient business model. So their construction projects are actually involved in a lot of different fields, not only in the utilities, but also in industrial, nuclear power, urban transportation system, heavy civil, and roads and highways. So if we goes down here, we can see actually the companies has a lot of future projects that has been secured that could be up to 2028 or like this one over 10 years from 2019. So that project will last until 2029. So this is a good news for us investors because we know that for this construction company that they already have a lot of project undergoing and it could last for more than 10 years. And the major project and concessions will provide stability to this company. So if we look at their project timeline here, we can find they will actually involve a lot of working in the LRT in different cities, as well as building this airport. So all these projects will actually goes until 2047, 2053. So this can make us feel safe because we know that this company has contracts, this company has revenues that it is foreseeable. Currently in my portfolio, I have 7 shares of ARE with a total value of $170.06. So they take up around 3% in my entire portfolio with an average price of 17.69. So my all-time return is around 11% up. So I'm pretty happy with this stock so far. Overall, I think this is a good dividend stock to buy, especially if you want to diversify your own portfolio by adding some industrial sectors into your stocks. So what's your thoughts on this company? Do you like this stock or not? Please share your comments with me in the comments below, and I would like to know your thoughts. Thanks for watching my video and joining me on my investment journey. If you like my video, please smash that like button, subscribe to my channel, and share your thoughts with me in the comments. That will be great helpful to me. If you have not started investment and want to start now, consider using Wealthsimple Trade, a commission-free platform that allows you to access most stocks in the Canadian and the US market. If you use my referral link in the description, you will get $10 bonus when you invested $100 in it. If you already have an account but haven't redeemed the bonus yet, you can still get it by using my referral code shown on the screen. Thanks again for watching, and I'll see you in my next video.